Do you want to know one of the best strategies for trading gold? Then watch to the end. Hey, my name is Thomas, and in this video, you'll learn how to trade gold better than most traders. There will be patterns that work the best, tips and tricks to help you trade, and useful information to help you understand the market. Also in the video, I will share my outlook on future gold movements. Get yourself comfortable and let's start. It is better to start with patterns and technical indicators that gold loves the most. Gold is a very tricky instrument that loves to make fake breakouts, bull and bear traps, and more. However, there are a couple indicators that suit gold perfectly. One of them is the Fibonacci retracement and expansion tool. A Fibonacci retracement is a tool that helps you measure the support and resistance lines for the reversals. To set it up, you just need to choose this indicator in MetaTrader 4 or 5 and put the first point at the start of the movement. The second point needs to be placed at the end of the movement. We can also call it a swing high and a low swing point. Do it and you will get a set of levels that the price is likely to react to. Let's take a look at the example. So here we found the high and the low of the price movement and placed Fibonacci retracement levels. As you can see, the price reacts to almost each of these levels, reversing from them and providing you an opportunity to earn some money. Now, as you can see, you might open a sell trade on every level and earn on a pullback. The price reversed from the 38.2 level, 50 level, and 61.8 level. The main benefit of Fibonacci trading is that the price is moving very accurately and you can enter the trade with a relatively short stop loss. So use Fibonacci retracement in your gold trading to set steady support and resistance levels. The next indicator on the list is the RSI oscillator. It works amazingly on the gold chart, providing you with valuable insights on possible trend reversals. So what you need to do is turn on your RSI in your MetaTrader and look for divergences. You can learn more about divergences in our materials. Links will be in the description. Now, let's find some divergences on the chart. Here's an amazing one. The price went higher and gained volatility, and the RSI printed a divergence. This is where we should sell gold. As you can see, it worked out great. Your take profit should be at the last high of the price and below it. This way, you'll make a trade, a risk-free one, and that's what every trader should try to achieve. How to know whether the divergence is good? As for me, it works best with high volatility. As you know from the previous video, be sure to check it out. Volatility increases in crisis and recession times. This way, the pullback is more likely to happen because volatility decreases over time. Also, some indicators work better together. It is true for the RSI and Fibonacci. The specific nature of gold asks for special trading techniques to be used. You can either use Fibonacci and the RSI, or you can use the strategy of retest and the inverse correlation with the US dollar. But remember to take into account all of the factors which could potentially influence gold. This will prevent you from risks and make your trading more profitable. In the next video, we'll talk about gold rivals such as the US dollar, inflation, and crypto. Be sure to check it out and take your trading to a completely new level. Trade smart. Bye.